Today we're going to be backtesting creating an expert advisor based on put-call ratios to trade the DAX. So kicking us off, what is a put-call ratio? A put-call ratio refers to the options market. And as you guys know, there's two major categories of options, puts and calls. Puts can be seen as a bet that something is going to go down, that the underlying is going to go down in value. This could be an option on a future, on a stock, but you're essentially betting that the underlying, which is either a future, a stock, etc., is going to go down. Because the put is a option but not the obligation to sell something at a given price. So if you think that, for instance, your shares are going to go down, you might want to lock in a price at which that you're able to sell them at. And a call, on the other hand, is the option but not the obligation to buy something at a given price. So let's say that you want to, for instance, make sure that you can buy wheat at $100 and you're not sure, maybe it will go to 110, maybe it'll go to 120. You can buy call options, which essentially give you the obligation, pardon me, not the obligation, that give you the option of buying at $100 here. But effectively, and for all intents and purposes today, puts are bets that something's going to go down, calls are bets that something's going to go up. And that's why the put-call ratio is really interesting, because effectively it tells us what the options market thinks is going to be happening to a given security on a given day, or depending on the expiration of the options contract during a given time period. So effectively, it's almost a voting machine as to what the market thinks is going to happen to a particular asset, and a lot of different ranges are kind of priced in, and the information is then given to us via the options prices. So today we're looking at specifically how we can use the put-call ratio to trade the DAX. And here you can see that every day, Eurex, which is the major European futures exchange based in Frankfurt, and that is the kind of the home exchange of the DAX, publishes the statistics in regards to the put-call ratio on the DAX options, or the ODAX options. So here we can pull up the options chain. We can see different options with different expiration dates in both the calls and the puts with different strike prices. But if we look at the statistics here, we can see that every day we have the put-call ratio defined. And what I was trying to do here is I've been seeing a lot of success with our Longbow Fund Manager Expert Advisor. And our Longbow Fund Manager Expert Advisor uses the Commitment of Traders report as a fundamental bias in order to buy US equity indices and gold. And the reason why it's so effective is essentially it can capture the full daily range by essentially buying at the open and selling at the close. But in order to do this, it needs to know which of these assets is most likely to be bullish on a given week, and if any of the assets are going to be bullish on a given week. And the Commitment of Traders report I have found is a really good data point for this, because it gives us almost the wisdom of the market to know whether or not we should be buying an asset or not on a given day. And I was looking for something similar for the DAX, particularly because currently we're in a very bullish time period for the DAX, and especially with the German debt brake being lifted, we are going to be seeing ideally some very bullish price action here on the DAX. And because of that, I wanted to have a bot which can capture the full daily range, because we have quite a few nice days where the total range is quite significant. And at the same time, I found that on many days, if the DAX goes up, it goes up pretty cleanly. So here's a day where the DAX went down, it was pretty choppy, but on many of these days where it goes up, it can be rather clean. Obviously not always, but it can, generally speaking, be it can have rather clean price action. But to my earlier point, the unfortunate thing about the DAX, not necessarily unfortunate, is that we don't have Commitment of Traders report data. And this is simply because it is a European traded security. And Commitment of Traders report gives us open interest data specifically on US futures. And therefore, we have to find something which is kind of comparable for the DAX, as we do not have Commitment of Traders report data. And that's what led me to the put-call ratios, because essentially we can use the put-call ratio to tell us if the market is more generally bullish or more generally bearish on a given day. And specifically here with the put-call ratios, usually anything below 1 is seen as very bullish because that means that the calls are greater than the puts. And the bigger the number this is, the more bearish the market is because the puts are bigger than the calls. And it's just a simple fraction, right? Like if there's a ton of bearish bets and not many bullish bets, the number is going to be big, indicating that the market is very bearish, and vice versa. So to actually get this data, if you go to the Eurex's website, they give us the trading statistics on a day-by-day basis for many, many days. And if you open up those files and download them, you can see that we have these nice Excel files from the Deutsche Börse group, and then we're able to see all of the different securities which trade on the exchange with the traded contracts, the volumes, etc. And what was useful and interesting to me, and the reason why I chose DAX here as opposed to, DAX options as opposed to like actual DAX futures, is because if we go to the DAX proper, they don't tell us the proportion of people who are long and short, and they don't necessarily break it down into different categories of speculators. At least in the free data which they offer, they simply offer like, hey, this is the total volume traded on a given day, and this is the current open interest. And for us as traders, it's not particularly helpful because we're trying to ascertain if there's a bullish or bearish bias, not just look at the total volume being traded. I'm sure you could use the volume if you're taking more of maybe a volatility-based trading strategy, but for the intents and purposes of this exact expert advisor, we need something to give us to kind of confirm a bullish bias for the day. And that's why I chose to look at the DAX options, because of this beautiful number here, which is the put-call ratio. So that means that any given day, we can go through these hundreds and hundreds of files and essentially extract the put-call ratio. So what I did, and I did not do this manually because that would have taken forever because there's several thousand files here, is I created a little script in Python which went through and downloaded all of this. And essentially we downloaded all of the data and then we extracted, this is for the European options, but same thing up here with DAX. And then we went and we extracted the rows. And what that enabled us to do is go out and create, I can show you guys here too, another file where we have all of the extracted data nice and clean. And we're able to see day by day the different DAX options and effectively ascertain like every single day over the past several years, what was the put-call ratio. And then what we can do, and this is more like the back-end analysis, so I won't bore you guys with the details, but effectively I'm able to see, is there a relationship between whether or not the DAX went up or down and the previous day's put-call ratio. So I like to use pivot tables as I have a finance background, but you can do this in Python too. But essentially ascertaining whether or not there's a statistical probability that if we look at the previous day's put-call ratio, does it make it more likely that the DAX will go up the next day? And you do that simply looking at daily bars, and this particular data was extracted from 8cap and seeing like, hey, did the price go up or down given the previous day's put-call ratio? So you have to use a shift here to avoid look-ahead bias, and this enables us to kind of see if there's a statistical relationship. And my understanding here is this is our pivot analysis. We look at the previous day's put-call ratio relative to data to go up or down, and we can clearly see a good statistical relationship here. If we look at our baseline, that the DAX went up around 54% of the time. If the put-call ratio is low, the DAX went up like 63, 64, 58% of the time. So clearly there is a statistical relationship here. It shows that if we actually isolate for the days of low put-call ratios, the next day's DAX is statistically more likely to go up. So given this in mind, I could then simply export all of our data here to a nice CSV file. We look at the date and the put-call ratio, and we can then read from this in an expert advisor to determine if we can actually make a cool trading strategy here. So all of this work to pretty much extract all the data, getting these two rows, or pardon me, these two columns of data, we look at date and whatever the put-call ratio was on that given date. And now we take that here and we created an expert advisor, and this is the German longbow. So what German longbow will do quite simply is it will look to see the previous day's put-call ratio, whether or not this is going to be less than 1.5, As stated earlier, 1 is kind of the cutoff point, but I found that if you make it 1, there's just not enough trades. So in order to kind of increase the number of trades, I put it to something which is still on the lower end of put-call ratios, because I have found, particularly in this data, that more often than not, due to the hedging nature of options, the put-call ratio skews to the high side. And that makes total sense, because options are often used as a hedge, and people are far more likely to go long DAX because it's an index. Therefore, the fact that the put-call ratio is generally skewed higher than 1 is totally reasonable. Therefore, putting this number 1.5 is fine. And then apart from that, it's a very simple trading strategy. We buy at the open. I always leave a few minutes just to kind of negate the impact or reduce the impact of spreads. So we buy at the open, we sell at the close. And as you can see here on the 4-hour chart, buy at the open, sell at the close, buy at the open, sell at the close, buy at the open, sell at the close, and et cetera, et cetera. I also use a very generous trailing stop loss here, where essentially once we make 2.5 Rs in profit, we start to trail, and that's by 0.5 R. But even without that, we're still very profitable. So not really a tremendous difference there. It's not as good as Longbow Fund Manager, but I do think that one of the big elements of that is the fact that DAX has not been generally like as bullish over recent years relative to like the Nasdaq. And if we see, for instance, that the German economy might be unleashed over the next few years because they're going to be putting a ridiculous amount of debt into the economy and using some good old fiscal stimulus, that could actually change up a lot of this. Therefore, that's one of the reasons why I wanted to make this bot, was I want to kind of benefit from the money printing which might be occurring in the German economy. And yeah, so that's essentially how the strategy works. Here I used, I believe, every tick based on real ticks, but if you want to do it with 1 minute open, high, low, close, for these type of swing systems, it doesn't make a tremendous difference if you want to run it a bit faster. And the only benefit there is that with certain brokers where you don't have a tremendous amount of tick data, for the DAX specifically, candles can also work here because you're not that spread sensitive with swing trading strategies. And what it shows is that it's actually very effective. Essentially here, in terms of risk management and exits, yes, there is a trailing stop loss, but most days it will simply close at end of day. And at the same time, in terms of risk management, you are setting a stop loss at 1/4 of the day's previous range. Typically, I've always used 1/3 with our US equity markets, but I have found with the DAX's price action in particular, it doesn't, quite often when it goes, it goes. And I know that sounds a bit simplistic, but if you look at US equity markets, because they're fairly actively traded during the pre-market hours, you will oftentimes see a dip in the morning before it goes up. Therefore, a more generous stop loss can be beneficial. The DAX A, it opens a bit later than the US equity markets, and it's already kind of in its main session fairly early in the morning trading. Therefore, quite often it just goes. It doesn't necessarily have these dips before going, and therefore the tight stop loss did prove to be more effective in some very, very basic optimization. With these type of systems, I prefer to do as little optimization as humanly possible, having nothing to do with, I do not optimize the entries, I do not optimize the trigger or the filters. There is no real filters here. It's just purely a fundamental filter. And the only thing which was slightly optimized was the stop loss levels. So very minute optimization here to reduce any sort of risk of overfitting. So guys, this was essentially how the strategy works. Now the one thing you're going to ask me is, okay, great, but like how do we actually actively trade this? Because yeah, it's great that you can get historical data, but how do you do this live? And in order to do that, I'm still refining that, but my initial thing is every day this ratio is published. And fortunately, this ratio is published at around 7 p.m. Eastern Standard Time. So that's my time, and that's a few hours before markets, or the DAX generally reopens. And around 1 hour before I suppose around that, before the DAX actually reopens. And the benefit to that is that this number is available before we have to make a trading decision, which is key, because obviously if this number would be released 2 days later, we could not use the previous day's trading information because we can't go see into the future. But in order to extract this data, what do? And if you guys use my Longbow Fund Manager Expert Advisor, you know that the CFTC does have an API which enables us to extract that. The issue with Eurex is that their free API does not give us market statistics. It only gives us like contract specifications and more like data in regards to the actual tradable instruments. So how do we get this number? And in order to get this number, I actually set up the Perplexity API. And if you're familiar with the Perplexity large language model, it's actually a very smart search-based large language model. And effectively all we're doing here is we're sending a web request to Perplexity from the MetaTrader Expert Advisor, giving it the URL of Eurex and being like, hey, go pull this number. And then Perplexity will essentially go pull this number, put it in the Expert Advisor, and then we have the Expert Advisor's number for the day. So one thing I'm working on is that sometimes Perplexity grabs the wrong day. So that is one thing and why we test these things in demo. But because the number is released before the market opens, it's only in it will work, right? We have the data. It's just a matter of getting it in properly and prompting in an intelligent manner to do so. So guys, this is our new German Longbow Expert Advisor. As you can see, over a few years, it turned $10,000 into around $20,000. The drawdown's around 14%, so relatively modest, and it's an excellent system. So I look forward to forward testing this for the next 4 weeks, seeing how it works, and then I will be using it on my own personal accounts. So hope you guys enjoyed the video, a bit of a longer one, but it's also cool to go into the weeds. And yeah, leave me a comment if you have any questions. Take care and have a great day.